Hi and hello, thank you so much for tuning in. And if you are new, welcome to my channel. My name is Preeti Rao and I am both a real estate and a mortgage broker for close to 20 years. Now, the Canadian Real Estate Association released its national sales data for the month of April the other day, which, as expected, showed a major increase in prices nationwide. And with prices continuing to shoot upwards, people, especially within the banking sector, are questioning whether the Bank of Canada has raised interest rates high enough. Now, this view was no doubt amplified by the release of Canada's inflation data, which came in at 4.4%, much hotter than expected. And with the real estate market that is also heating up, it's not helping the inflation data at all. This is definitely going to be unwelcoming news for the Bank of Canada, who has put a pause on the interest rate hikes just a few months ago. So what I want to do today is go over Canada's real estate data for the month of April, discuss the inflation data that just came out, and take a look at some of the implications for the Bank of Canada's raise announcement that's coming up in just a few weeks, so I think on June 7th, and then discuss what to look for next. But first, you know the drill. Make sure to like, share, subscribe, tap that bell icon. It gets me motivated to keep you up to date with everything real estate. First, let's talk about the benchmark price. Now, the benchmark price, if you remember, is when the sale price is predicted in a certain area for a general property. The house price index determines the benchmark price, and it is given based on criteria that are commonly found in other properties in the same area. The benchmark price in March was sitting at $709,000, and that jumped up in April to $723,900. So we have an almost $15,000 increase in the homes within the most common set of features. In March, the average price was sitting at $686,400, and that shot up by nearly $30,000 to $716,000. So we have a $30,000 increase in the average price and about a $15,000 increase in the benchmark price as well. And all this makes sense when we look at the lack of listings coming to the market. While new listings are up by 1.6% from the month prior, they are still sitting at a 20-year low, so very similar to last month. And in line with that, with what we've been seeing from the local boards, a lack of listings combined with pent-up demand is leading to higher prices. Now, we did see a lot of buyers becoming active in the market in the second half of April, but with the inflation data that was released just the other day, it's not clear as of yet that interest rates are at the top, or for that matter, that real estate prices are at the bottom. As a matter of fact, Stats Canada's CPI release came out at 4.4% from the 4.1% that had been predicted by economists, and this was the first acceleration in Canada's inflation in 10 months, and definitely not the direction that the Bank of Canada was hoping for. Higher mortgage costs and higher rent costs were the biggest contributors to the increase in the inflation data for April. That being said, the pace of food price increases did slow in measures of core inflation. Food and gas also continued to slow down from March. Bond yields popped up on the release of the data as traders increased their bets that the Bank of Canada would raise rates, and with good reason, as this data shows there are a number of indicators working against the Bank of Canada's pause right now. Many economists are not going to be thrilled with seeing the real estate market ramp back up again, because this will put an upward pressure on our shelter costs in the latter half of this year. So we have the real estate market heating back up again with the average and the benchmark prices all up. We have the inflation data coming in March hotter than expected, basically re-accelerating for the first time since June of 2022. And we have the job market, which the Bank of Canada has been trying to actively hurt, which is proving to be much more resilient. And the inflation data coming in hotter than expected. I think the Bank of Canada does have the cover that it needs if it wants to raise interest rates in June. If it wants to reverse the course on the pause that began in March, which, as the Bank of Canada's minutes already demonstrated, that it was close to doing so at its last announcement. Now, I don't think we're going to go back to the multiple consecutive 50% basis point rate hikes anytime soon. but I don't think that a 25% base point rate hike is out of question at the June announcement. Plus, the bank is going to want to send a signal to the market, to the economy, to the prospective buyers that it will raise rates if need be. With that being said, it's not clear whether or not the Bank of Canada will raise interest rates after the June announcement, but we'll obviously have an update on those announcements as it happens on this channel. So if you have any questions or want clarifications, please do not hesitate to call me. If you still don't know who I am, just go check my rating on Google and read my client reviews. Till then, take care, and if you found value or liked this video and would like to see more content, click on the boxes on the screen. Once again, my name is Preeti Rao. My contact information is in the description box below. Make sure to hit like, share, subscribe, the bell icon so you don't miss any future videos. Thank you so much for watching, and don't forget to call me because I hold the key that opens the door to your dream home.